Our next guest, CEO and Chief Global Strategist over at Euro-Pacific Capital, Peter Schiff, adding this terrifying fact on the state of our economy. Here's his ex-post this week. Due to a weak economy and rising rates, the national debt is over $33.7 trillion, an increase of $700 billion in just over 6 weeks. At this pace, the national debt is growing in excess of $5 trillion per year, despite official deficit projections of under $2 trillion annually. You just can't keep spending more than we bring in, printing money, and doing what they're doing within the Biden regime. Joining us now to, I don't know how we find any silver lining, but maybe you can tell us what to do, keep our head above water, Chief Economist and Global Strategist, and the founder of Schiff Gold, economist Peter Schiff, back on the program. Peter, how do I keep my head above water with all this doom and gloom, for God's sakes?
Well, you know, it's actually doomier and gloomier than those headlines suggest. I mean, if you dig beneath the 99,000 private sector jobs that were created, those are almost exclusively part-time jobs. They're low-paying jobs. They went to people who already have 1 or 2 jobs. The number of Americans working multiple jobs soared almost 400,000, I think, to another all-time record high. We lost 35,000 manufacturing jobs. All this talk about the revitalization of manufacturing, it's just a bunch of BS. We're losing these jobs. These are productive jobs. They're good paying jobs. And instead, we replaced them with more IRS agents, right? We hired 51,000 government employees added to the payroll. They don't produce anything but red tape.
Right.
They actually undermine economic growth. They lead to bigger deficits and more inflation.
Housing market. I mean, I remember the '08 bubble pop. I was involved in it. I owned 2 properties at the time, and I got spanked. I lost a lot of money. It took years to recover. What's happening with the housing market? I mean, I live in Southern California, and what people are paying in San Diego is insane. And these interest rates so high, how the hell can you afford to buy anything? Is there going to be another bubble pop when it comes to the housing market?
Well, absolutely. First of all, the only way you can afford to buy something is if the price goes down. But the problem is when the price goes down, the banks are in a lot of trouble because that's the collateral for these loans. But why this is a bigger financial crisis now than in 2008, it's the banks are losing money on all the mortgages, even the mortgages where people are paying. Back in '08, it was only the defaulted mortgages that were a problem. Now all of them are a problem because the banks are only earning, 3%, 4% on these mortgages, but the cost of money is now 5.5%. So the banks lose money on every mortgage that's being paid. So the entire banking system is completely insolvent, and commercial real estate is an unmitigated disaster. Now, we just had the bankruptcy of WeWork. It took a while, but that's going to put a lot of office space on the market. It's already depressed. It's oversupplied. Commercial real estate prices are being cut in half, and the banks have huge losses.
Ooh, okay. The last question's an easy one, Peter. How do we keep our heads above water throughout this? Because we know it's going to last a while.
Well, just got to recognize that the inflation tax is going to keep going up. And to avoid it or mitigate it, you got to get out of U.S. dollars. Don't leave your money in the bank. Don't leave it in treasuries or any kind of dollar-denominated bond. You should be buying gold and silver as an alternative store of value, and you should be investing in real assets. That's what I'm helping my clients do at Euro-Pacific Asset Management. Invest abroad in income-producing foreign stocks, investments that will maintain their real value and deliver incomes that will preserve purchasing power so you can stay even or one step ahead of inflation.
Time for me to give you a call offline. Peter Schiff, Chief Economist, Global Strategist. Take care, brother. We'll talk to you soon.
All right, Dan. I'm waiting for that phone call.
Okay, seriously, guys, get his phone number.
All right, we'll talk soon.
Get his cell. Thank you, Peter.